Hello guys, welcome back to another video with Bot Trader, and in today's video I'll be showing you guys the most efficient way and the easy way to approach or analyze the static indices market. So you all know whenever you want to analyze, you start from the higher time frame, possibly the weekly time frame, and which is the best time frame to start from whenever you want to analyze. So you can see the clearer picture of the market. You can see how the market is moving, the overall market direction and all of that. So on the weekly time frame, you can see that the market has been on this actually volatility 251s. So on the weekly time frame, you can see that the market has been pushing downwards for weeks now, like a strong impulsive downward move. So what's the so when we might have identified the overall market direction on the weekly time frame, then we spot our key levels. Key levels are basically important levels in the market. Those levels at which the market makes its major moves. Those have been trading for some time now could attest to this, that there are some points at which the market will get to and there would be a major move or a major push, or maybe a market change of direction or a market reaction, a strong reaction from a particular zone. Those levels are basically key levels. They're important levels, and they are levels at which you should always take note of whenever you want to analyze the market. As you all can see on the weekly time frame, you can see that this level is a level is a very, very important level, because this level was once a support at this point. Finally, market broke below it, acted as a resistance a couple of times. You can see the rejection here, first rejection, second rejection, and third rejection for the market dropped downwards. So on how the market drops downwards, we have another important level at which we should only also analyze, because this level was a support level at some point, now turned resistance. You all know whenever a support level breaks, it automatically turns to a resistance level, as it did here. You can see this level was a support level. It finally broke with this strong or with this bearish impulsive candle. You can see, and when it broke below this level, the market came back to retest this level, turning this level that was a support to a resistance. And you can see the market came here, tested here with this candlestick wick and the rejection, then the market pushed downward. So the same thing likely to happen here, because we actually use the past market moves to predict the future market moves. So you all can see this level was a support level, and you can see the market reacting to this level. Then finally the market broke below it. This level is automatically resistance level at this point. So if the market can come back to this level, if the market can come back to this level to retest this zone, there's a high chance that the market would react to this point and would be shorting the market at this point with on a lower time frame with some candlestick rejections or a candlestick pattern or a chart pattern, any confirmation that you're using entering your trade. So this point is actually an important level in the market. So that's how it is in all time frames. So let's head to the daily time frame. We can't basically trade on the weekly time frame because it's a higher time frame. We can't be holding trades for months, and this is a very volatile market. So let's head to the daily time frame. So on the daily time frame, you can see how clear this level is shown, like the rejection at this point. Market is pushed upwards, finally broke below it, turning to resistance, and we had a small break and retest at this point. You can see when the market broke below this level, it retested it, but not really a perfect retest. But the market gave us a retest, and you can see the market dropped afterwards. So possibly this is a very, very nice level at which the market would react to whenever it gets to it. So there's the next thing we should do on the daily time frame. We have to spot the daily time frame structure. You can see on the daily time frame we have the market creating this downward channel. There's a channel on the daily time frame which the market is creating, at which the market is moving in. You can see. So when we zoom in, you can see the market creating this downward channel. So on this downward channel, we actually have an important level as well, as which we should take note of. An important level. So we have this level as our key level at this point. We have this level as our key level because you can see how the market reacted to this point, broke below it, gave us a retest, then it's dropping afterwards. So we also have another level at which you should take note of, but we have to move to the 4 hour time frame. So in the 4 hour time frame, you can see it's even clear on the 4 hour time frame that the market broke below this level. Market the market was trading at this point, like a support at this point. Then finally was trading above it, then broke below it, gave us a retest. Not really a proper retest, but the market finally gave us a proper retest at this point. This is actually a nice retest the market gave us here with some weak rejections. You can see how the market rejected at this point, the candlestick wicks. So how the market rejected at this point, you can see how perfect the market dropped. So there's actually another important level. So we keep spotting our market levels and how the market broke below that level and our possible retest on that level, and on those levels basically our market structure as well. So on how the market have been moving in a general downtrend, it will give us a good confluence, because the market is actually in a downtrend, and the overall market direction is downwards. Everything is being bearish now. So on how a level is being broken, a support level that is being broken here, whenever we see a retest of that level, we'll be actually expecting a continuation of that market direction, which is a downward move, which is a downward push, because of the market's overall direction. So at this point on the forward time frame, you actually have another important level at which you should be looking at. You have this level 2, which is a very, very important level, and it's our level of focus at this point, because we can't just be trading all these higher time frame levels. So we have to still move lower to spot important levels on the lower time frame to look for an opportunity. So you can see how the market reacted to this point, bounced off it, gave us a retest at this point, then dropped. You can see how the market came to this point, was trading on this point, finally broke below it, but there's no retest at this zone there's no retest at this point. So we have to look out for a retest of this level. If the market can give us a push back to this level, we're expecting a sell-off from this zone to the downside because of the overall market towards direction. So let's move to the 1 hour time frame to see it clearly. So on the 1 hour time frame, there is it's clearly shown that this level is a very, very important level, because you can see how the market has been sitting on this level, which is a very, very nice information we need, like how the market reacts to a level, how the market stays on a level, and how the market broke a particular level. You can see how the market was staying on this level, then gave us a double bottom formation that gave us this push to the upside, came out to retest this zone, then the market traded downwards. Market traded downwards and finally did what? Broke this level. Finally broke below this level. You can see how the market broke below this level. So what's our point of interest? So at this point, we're expecting the market to give us a retest back to this zone. If I can get a proper retest back to this level. So if the market can give us a nice retest to this zone from this particular point, if I can get a nice retest to this point, remember we will not be buying this index from here because we expect the market to give us a retest to this point. No, that's not our point of interest. Our point of interest is shorting this index whenever it gets to this particular level, because this is a very, very important level in the market. So we're waiting for the index to give us a push back to this point. Then we'll be shorting this index, maybe our stop loss above a particular zone, but we have to still move lower. We have to still move to the lower time frame, like the 15-minute time frame or the 30-minute time frame. So on the 15-minute time frame, you can see that everything is still the same, and you kind of have a market trend. Like we have a 15-minute market downtrend. So everything is actually speaking bearish at this point. You can see everything is being bearish. Market have been moving in lower highs and lower lows. So possibly there's a high chance that whenever the market gets to this point to be shorting, because we have this first touch of this trend, second touch, and basically be having a third touch of this zone. So whenever we get a third touch of this zone, we'll be shorting this index from this point downwards. Maybe our first tip will be at this point, and our second tip will probably be at the overall market direction support level. So that's actually how to approach the studying this is the proper way. You don't really need to complicate things. You have to just wait for the right time, wait for the right setups, wait for the right zones, like analyze properly, then wait for the market to come to you. You don't have to chase the market. The market is always there. Like even when you make millions, or whenever you blow your account, the market is still there waiting for the right traders who have the proper knowledge of the market to come trade it, because the market will keep taking advantage of those impatient traders, those traders who doesn't have the proper knowledge, or who just came to the market to gamble or to play around. So we have to just wait for the right zones, wait for the right moment, the right time to take a trade. Like, we don't need to rush things. Have to be very patient enough. So if you can be shorting this index from this point, our sell, if you can be shorting index from this zone, yeah, we're having our stop loss above this last week, possibly here. Having our stop loss at this point. Having our stop loss at this point. Our stop loss will stay at this point to give the market room to breathe. Then that's how to approach this netting is the proper way. So hope you guys got my explanations on all of that. And remember, patience is a very, very important key in the market. Being patient and being disciplined are very, very important in the market, because if you're not disciplined enough, even if you have the right market approach or you have the right trading knowledge, you still see yourself messing everything up, because you can't wait for the market to come to you, or you can't wait for those setups that you know would play out properly to come to you. You just have to just trade whatever formation is in the market, because you're not patient enough. So you need patience, you need discipline, you need to trust analysis and all of that. So it's hard to efficiently analyze and trade the stating indices markets. You really need to complicate things. Just pure price action, key levels, important zones, market structure, and all of that. So if you can put all these things into place, then we'll see ourselves making consistent profit in the market, and we'll see ourselves having a high winning rate of the market and all of that. So hope you guys understood my explanations. Hope you guys got a couple of things, how I explained, how I analyzed, and all of that. So to my new viewers, you guys should do it, subscribe, and to my returning viewers, shout out to you guys. You guys are the OGs. Let's keep doing what we do, and have a wonderful day. Peace out.